As of 11:40 a.m. Eastern Time on November 17, 2025, Autonomix Medical, trading under the ticker AMIX, is at $1.075 per share. That is a staggering intraday move, up 47.87% or just under 35 cents from its previous close of 72.7 cents. But that single number, $1.075, doesn't even begin to capture the sheer chaos and volatility of today's session. This stock gapped up at the open to $1.185, immediately spiked in a massive wave of buying as high as $1.55, and has since given back a significant portion of those gains, pulling back more than 30% from that intraday high. What we are witnessing is not just a rally, it's a speculative feeding frenzy. The volume is absolutely breathtaking. 240.9 million shares have already changed hands in the first 2 hours of trading. To give you the proper context, this company's average daily volume is often under 500,000 shares. Today's volume is an explosion, a true anomaly that signals a fundamental shift in the narrative or perhaps a massive opportunity for traders. Now, the expectation for anyone seeing a 47% move on volume that is thousands of times its average is simple. Some piece of blockbuster, company-altering news must have dropped, and they would be absolutely correct. The narrative driving this move is a press release that hit the wires this morning. Autonomix Medical announced positive results from a post-hoc subgroup analysis of its first-in-human proof-of-concept study. This study is for its nerve-targeted ablation therapy, a treatment aimed at reducing the severe, debilitating pain associated with pancreatic cancer. The press release was filled with the exact kind of language that gets investors excited, highlighting sustained, clinically meaningful quality of life gains and broad improvements in symptoms and functionality even in the most desperate case patients, those with advanced stage 4 cancer and distant metastases. For a microcap, or really a nanocap biotech that was trading near its 52-week low of 69 cents just last week, this is the kind of update that traders using platforms like the Robinhood app or SoFi Invest dream of. It's the lottery ticket. But here is the reality check, and it's where so many people doing self-investing get into serious trouble. The expectation is cancer breakthrough. The reality is much more complicated. Let's start with the stock's action. That massive spike to $1.55, followed by the fade back to $1.075, tells us the market is deeply divided. The initial euphoria, the algorithm-driven buys, the retail pile-on, has been met with a wall of sellers. Who is selling? It could be profit takers who bought at 70 cents, or it could be the company itself. More on that in a moment. The second piece of reality is in the press release itself. The key phrase is post-hoc exploratory subgroup analysis. In medical science, post-hoc means they looked at the data after the study was already completed, slicing and dicing it to find positive signals. This is not the same as a primary endpoint that was set from the beginning. The company, to its credit, even notes these are modest patient numbers. We're talking N equals 9 at 4 to 6 weeks and N equals 6 at 3 months. And these findings will require prospective validation. The market reality is that day traders, perhaps using the sophisticated platforms of interactive brokers, are scalping this massive volume for pennies, while long-term holders are desperately asking if this small-scale, post-hoc data is truly enough to fund the company through its next, much larger and far more expensive U.S. multi-center trial, which is currently planned to begin in 2026. To understand the stakes, we have to look at the financial position of Autonomix Medical, because that is the real story for any development stage biotech. This isn't Apple stock or Nvidia stock, which are effectively printing presses with tens of billions in free cash flow. This is a company in a race against time and its own balance sheet. According to its most recent financial statements, Autonomix Medical is generating zero revenue. Its operating income over the last 12 months was a loss of nearly $17 million. Net income was also a loss, coming in at $16.69 million. This is the burn rate, the speed at which the company is consuming its cash just to keep the lights on and the research going. Now, here's the critical part. As of its last report, the company had $7.48 million in cash and, importantly, no debt. This gives it a net cash position of approximately $1.26 per share. This is a stunning figure. At its current price of $1.075, the market is valuing this company at less than the cash it has in the bank. This means the entire technology platform, the microchip sensing array, the ablation system, and the 120-plus patents are being valued at less than zero. This is what creates the floor for value investors and the launchpad for speculators. The market was, and to some extent still is, pricing this company for failure. But why? If the tech is so interesting, why is it trading below cash? The answer is dilution. Shareholders in AMIX have been massively, substantially diluted the past year. The total number of shares outstanding has ballooned by over 148% year over year and 74% in just the last quarter. This is how these companies survive. They don't sell a product, they sell their own stock. This is their funding mechanism. They use their stock as an ATM. And speaking of ATMs, just recently, Autonomix increased the aggregate sales price of shares that can be sold under its at-market issuance sales agreement with Ladenburg Thalmann by $1.4 million. This agreement allows the company to sell shares directly into the open market at the prevailing price. Today's massive 240 million share volume spike and the price surge is a golden, unmissable opportunity for the company to execute that ATM offering and fill its treasury. This is the central, brutal tension of microcap biotech online investing. The good news that makes the stock go up is the very event that allows the company to sell more shares, which puts a cap on the rally by flooding the market with new supply. The fade from $1.55 is not just traders taking profit, it is very likely the company itself selling stock to fund the 2026 trial. This is a high-stakes, high-risk situation. It's the definition of a speculative biotech play. It makes me wonder what you all are doing with it. Comment below if you are trading AMIX today or if you think this is a long-term hold. Let's look at who else is involved. This is not a stock held by the big, active Fidelity mutual funds or managed in portfolios by Fidelity Wealth Management. When you look at Fidelity or Schwab Intelligent Portfolios, they're looking for stability and growth, not binary bets. The institutional ownership of AMIX is tiny, at about 5.5%. The general public, the retail investor, owns a staggering 88.5% of this company. This is a retail-driven stock, which explains the massive emotional swings. The few institutions that are in are names like Susquehanna International Group, Virtue Financial, and Tower Research Capital. These are high-frequency trading firms and market makers. They're not in it for the 2026 clinical trial. They're in it to provide liquidity and capture the microscopic spreads on today's 240 million share volume. They are the house in this casino. We do see some Fidelity ETFs, like the Fidelity Total Market Index Funds, FSAXM and FCFMX, holding tiny passive positions, but that's just because it's part of the index. The active, directional money is almost all retail. The company's recent history is just brutal. It is down 93% in the last 52 weeks, even after today's move. That $14.06 52-week high feels like a distant memory. To even stay listed on the NASDAQ, the company had to execute a 1-for-20 reverse stock split on October 25, 2024. This is a classic last-ditch sign of a company struggling for survival. Today's news is the first real, tangible lifeline it has had in over a year, a lifeline that has, for now, pulled it back from the brink of delisting and given it a new story to tell. So what is that story? What does Autonomix actually do? The company is focused on developing technologies for sensing and treating disorders of the peripheral nervous system. Their core platform, their secret sauce, is a proprietary catheter-based microchip-enabled array. Think of it as a highly sensitive antenna that can be guided through your blood vessels. They claim this technology can detect and differentiate neural signals with a sensitivity that surpasses other tech available today. It senses the specific nerves that are firing and causing problems. Once it senses the target nerves, in this case those in the celiac plexus that transmit pain signals from the pancreas, it uses its other technology, radiofrequency ablation, to burn and kill those specific nerve fibers. It's a sense, treat, and verify approach. The pancreatic cancer pain application is their first target. A key finding from their study was the ability for patients to stop using opioids, a massive quality of life